Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to today's Bull versus Bear webinar with Trade Day. Steve Miley on the call. Today's Wednesday, the 28th of June, in case you don't know what day it is. Right, okay, let's go for our usual regular run through. But before we do, just a quick heads up, guys. Quick heads up in here. No webinar tomorrow. I'll say it again. No webinar tomorrow. No webinar Thursday. And I'm going to put it in the chat as well. No webinar tomorrow, Thursday. What day is it? The 29, right? 29 June. Okay. So just put that in the chat as well. No webinar tomorrow, Thursday, 29th of June. Fortunately, we're going to have to cancel tomorrow's webinar, but we'll be back with you on Friday. And I might just give you a little bit of a heads up of what we've got coming up onto Thursday as well, then maybe just so but there's nothing much actually. It's a fairly light calendar. Been a fairly light calendar all week, apart from yesterday. So let's get going. So we're going to take a look at all the macro fundamental geopolitical events that are impacting markets like now, looking at the calendar, looking at central bank events, etc., running through the major news wires, quick look at the charts. So yesterday, busiest really data day of the week, and boom, everything bullish. I mean, unbelievable, right? Durable goods orders, green. Remember, durable goods are those goods that last longer than 3 years. Okay, so cars, white goods for your kitchen, and the luxury goods like TVs and that kind of stuff. So durable goods orders in here better than green, better than expected. I'm going to skip the Canadian data for now. We will come back to that. Then we go down to the housing data, house price index data in here, various house price index data, and then also new home sales in here. You can see pretty much mostly in here green, and green in here. Also, consumer confidence data, super important, better than expected, significantly better than expected. Boom, consumers stay strong. All better than expected. And then in here you see, although these in red, remember this pertains to the currency. Okay, so the green in here is all bullish for the dollar, and then the red in here is negative for the Canadian dollar because it's potentially going to make the central bank, the Bank of Canada, in here more dovish because the data was again better than expected. So even though it's in red for a negative, it's negative for the currency, but it's actually positive for the economy because inflation data was better than expected. Better meaning lower than expected. So lower than inflation than we expected in here, pretty much across the board as well. The headline data, the core data, etc. in here. So again, in here, all positives in here. So the not only was all the US data, durable goods more bullish and better than expected, all the housing price and home sales data from the US, plus the consumer confidence, plus then for the cousins across the border in here, the inflation data. Now remember as well, about 3 weeks ago, the Bank of Canada hiked rates somewhat unexpectedly against kind of what analysts were kind of thinking in here because of the concerns about, in their words, stubbornly high inflation, okay? And that is now showing that we are seeing a softening in inflation. So that's really good news for the global economy. There's also been some Italian data I'm going to come to in a minute in here. Chinese industrial production in here, though, although it doesn't show it in here, it was actually slightly worse than expected in here. I'll come to that. I've got an article on that. We've had that overnight as well in here. And the API crude stock inventory in here, bullish for, so a bigger decline in the crude stock. So that's bullish for oil, and we saw oil rebounding here today on the back of that. So that's what we had yesterday. That's looking back and overnight in here. So all of that was bullish. Obviously, then flipped us to risk on, even though we've been in that downtrend, even though the technicals were all setting up very negative. That raft of data in here, plus the fact that we're probably oversold on the sell-off that we're seeing in stocks in here over the last week and a half, means that we saw a really strong pop back higher in stocks yesterday and stock indices as well. You'll probably know because you were trading them, right? So then, yeah, markets and bucking that trend and going back to the bigger trend, which has been up obviously since pretty much up this year and up in here for the last month, although we've been down in here for the last week. So reversing that, like that downtrend that we had. So yeah, all of that data very, very positive yesterday. And then just that was looking back, looking into today. Again, here I did promise the inflation. Oh no, actually they haven't got the inflation data on here for Italy. But the Italian inflation data, I've got a little article on it, was better than expected as well. So we're seeing, and I know you think, oh, it's Italy, it's not a massive economy. Well, it's the third biggest economy within the Eurozone, so it is significant. It's in the top 10 economies on the planet. I think it's probably in the top maybe 8. I don't know where the Italian economy exactly is, but I mean, I think I'm pretty sure it's in the top 10 economies. So yeah, I mean, that's significant as well. We're seeing a slowing there of inflationary pressures, bucking the trend of what we've seen more recent, where inflationary pressures have stayed a little bit higher around the globe. Going into today, what have we got? Well, it's this ECB, the ECB forum in Sintra, Portugal, in here at the moment. They have this, I don't know if it's the annual, I can't remember if it's annual or biannual, this Sintra Portugal ECB forum. But the reason I mention it is because we get then, looking at today, we get four. Where are they? They got them in here. Here we are. There they are. So we've got Bailey from the Bank of England, Powell from the Fed, Lagarde from the ECB, and who's not on there, Ueda, is also speaking from the Bank of Japan. They're on a panel all at the same time. That's at 9:30 Eastern today. So 9:30 Eastern. That's going to be the main focus on today. We do get some light US data in here, retail inventories, all those goods trade balance. I mean, this in an hour's time, this doesn't really move markets usually. The focus is going to be on that. I don't think you'll get anything out of this panel though at 9:30. They're not going to sit there and say anything that we haven't heard before, but you might get something. So you definitely need to be aware of it. 9:30 today, Powell, Bailey, Lagarde, and Ueda from the BOJ all speaking on a panel, the ECB Portuguese forum in here. So yeah, we've got that coming up. That's going to be the main focus going in today. As promised, given we have no webinar tomorrow, so a reminder in here, no webinar tomorrow on Thursday. If I skip to tomorrow, what do we have? We get German CPI. Obviously, French CPI today, German CPI is going to be important in here. Are we seeing that this is the regional CPI, and then later on in the day, you get the national CPI. So you get the regional CPIs. These are usually a really good heads up as to what the national CPI is going to be like. So we're watching out for those in here. There's going to be obviously overnight for anyone in the US. If you're in Europe, you'll be picking these up early tomorrow morning in the European time. Some fairly light UK data in there. Some more important European data, but not super important consumer confidence from the EU. And then going into tomorrow, we do get GDP data tomorrow, and some of the PCE data. The main PCE data is actually though on Friday that we get. Bostic speaking as well tomorrow. So yeah, so nothing really. The GDP data, although it's like we've got 3 bulls in here. It's quarter on quarter for Q1. I mean, we're at the end of Q2. Do we care? I mean, it's so backward looking, this data. Even though GDP is super important as a big headline data, it's, most of this data we get from GDP is so backward looking, it's kind of irrelevant. We know the economy slowed in the first quarter of the year, right? No big shakes there, right? And, depending on where this comes in, it has to be massively out of line to have any impact because it's looking so far back, right? We're talking about the first quarter of this year compared to the previous quarter, okay? It's so backward looking. And, we're at the end of the second quarter now, so it rarely has a significant impact. The more important data is seeing if we see this German CPI data, and that you guys, if you're in the US, are going to see overnight. This is looking ahead, remember, to tomorrow. Today's focus is back to that ECB that ECB forum with the 4 central bankers on the panel today at what time? I've forgotten already in here. 9:30, right? 9:30 Eastern. 5 things to start your day. This is the main news that we've seen really overnight. The chip curve, so that came last night. Biden administration considering more curbs on chip exporters to China. So we've seen a dip, having that risk-on move higher. Yesterday, we've had a dip back lower, and that's mostly being driven by this, okay? So if we go and jump to US in here this morning, you can see, look, we're a third down in here. A third down on... Sorry, I'm going to get rid of that call, guys. So yeah, a third lower on the Nasdaq, and that's on the back of that. So Nasdaq helping us lower in here today because of this in here that we've had overnight. Recession bets. Biden thinks we're going to avoid a recession. Doesn't matter. What does Biden have got to do with it? Nothing really. FOMO bulls, mutual funds, buying stocks in here in June for the first time since February. Net buyers in here because of fear of missing out, and tech lower, as we said, on the back of that. And we've already covered what we've got coming up today. So he's here. You've seen Nvidia drop. Some reports US plans more AI chip curves in here. Again, in here, chip stocks drag down US futures. Stock 600 gains. So in here, that's the European stock 600. Futures fall as chips slide in here, and China AI stocks fall as US reported. So yeah, that's the main news overnight. There's the article on the Italian inflation, 14-month low. So positive, a real positive in there. On top of that that positive Canadian data yesterday. European shares are up, even though we've got like the dip lower in here this morning in the US futures. Because remember, we had a really strong close, and this is European stocks up from when the European stocks closed, which is like around lunchtime in the US. So we didn't pick up that rally later in the session. So European stocks playing catch up. So that's why they're up this morning on the back of the US positive data on the US rally. European shares climb. The yen continues to weaken in here across the board. Okay, the yen is weak and the euro is positive. Why is the euro positive in here? Well, we're seeing still a fairly aggressively hawkish tone coming out of the ECB. So the euro is up against the dollar and significantly up against the yen to multi-year highs versus the yen. The yen stays with London stocks also up, banking, travel boosting here. Tesla analyst in here said that they're going to hit a record quarterly sales in China, adding to the positivity in the tech sector that we saw yesterday. But we did get that, I said that earlier on, overnight data on Chinese industrial profits tumbling here. The entire Chinese industrial production data is more negative than expected. And oil did see a rebound this morning in here as the US inventory drop offsets the rate hike fears. So oil rebounding a little bit on, it's faded a little bit in here. The watching of what's going on in Russia, but Ukraine in here, obviously they're going to say this, but countdown started on Kremlin regime. Ukraine official says, and Belarus received the Wagner leader. So yeah, with what we're seeing in here is this has got a bit off of focus in here, but I do think this is going to be a massive story if and when it kind of continues again, and it will. Something's going to happen in the next. For me, it's probably going to be in the next 3 months. So we'll have to wait and see what happens on that in here. Where are we overnight in here? Well, Nikkei was up on the back of the US being up nearly 2% on the Nikkei, so moving back up to multi-decade highs in here. Hang Seng didn't really do much in here. So it did pretty well to hold on to gains and to not actually lose ground, given that overnight negativity regarding the AI chips. European stocks are up about 1% this morning in here. The FTSE about 0.7. The DAX, the German, the French, the CAC index, just under 1% higher. Playing catch up though, remember. They're playing catch up on what the US. This is not another 1%. This is because they didn't get the rally that was seen in the US in the US session. And overnight in here, so we had obviously a 1% up. You don't see it on the Nasdaq. Nasdaq was over 1%. The S&P was up over 1% yesterday, but we're slightly lower in here. The S&P's a little changed, but about 1/3% lower on the Nasdaq. Nothing really changing in here on the Fed tool. We've been sat between really 75 and 80% for chances of a next rate hike. And if we go to the end of year in here, more likely we're going to stay there or we're going to be lower. But, pretty even between whether we're lower or whether we're higher from that 25 up in here. But chances are we just stay. So that's not really shifting too much in here. Quick nod to the charts in here, and you'll see that trend line we drew yesterday on the Nasdaq in here. We broke that yesterday, and it's kind of using the underside of that trend line to support now. And similarly, if we go and look on the that's the daily, but we go take a look. Here we go. There's that kind of trend line we focused on, and even if you redraw that trend line off of that high there, we blitzed through it yesterday. So breaking up through that trend line, just fading notably. Look, see this little swing, this important swing high there. 44.27 just faded from below there. 44.24.75 back up through there, and more importantly 27 would open up potentially another significant up move in here today. Let's see if we get anything from the central bank speakers a little later this morning. But for me, the risk has definitely shifted from more negative to more bullish in here with that really strong rally we saw yesterday. And similarly, we're going to take a look at the daily chart in here. Really strong rally back above the 13-day EMA. Those peaks in there, I just referenced those 44.27 back above there is going to be important today if we can get back above there. Looks like the bigger bull trend that we've had not only for the year, but the more recent one that comes up from here in April in here looks like we could be looking to re-extend that on the bigger picture. Nasdaq as well. It's an inside day on the Nasdaq. Really needs to take out yesterday's high, the day before's high. You can see in here just fading there from ahead of that high. So you've got all these peaks in here. So really Nasdaq needs to clear 15,140 through 160. If it can get through 15,140, 160 again, it could easily add another percent to the top side in here. And don't be surprised to see a bigger move in here again today. I think we could have a little bit of FOMO going on, fear of missing out from the bulls, and we could really see another significant up leg. Right, any questions? Otherwise, I'm going to leave it there. I'm going to wish you all a great trading day. Remember, no webinar tomorrow, Thursday the 29th of June. No webinar tomorrow. We'll be back with you on Friday. Any questions? I'll just leave it, see if anyone comes through. Not seeing anything come through. All right, guys, I'm going to wrap it up there. Have a great one today. Take care, stay safe. We'll be back with you on Friday. Cheers, guys. Bye.